Hey guys, welcome back. In today's video, we are talking about short buying AMC, the exit price of $406 per share, and many more in this video. First, we're taking a look at this. Institutions now hold a total of 291 million AMC shares, or 56.74% of the share flow. Insiders hold 11.7 million AMC shares, or 2.3%. Do you really believe retail ownership went from 90% plus to now 40.96% in a few months? Their gaslighting and manipulation never stops. So firstly, what we have to understand is we've always known that the retail ownership of AMC has been extremely high. We've never seen a broker in terms of coming in with the same data as our brokers. So we never had a clear understanding in terms of what the true ownership was. However, we knew that it could easily range from 85% all the way up to 95% plus for retail ownership. And now what we're seeing is that in a matter of a few months, it dropped from 90% to 40.96% without any clear signs of selling. So we obviously know that that is not the case. A few things to obviously look out for is firstly, look at what's strange. As we're seeing the share price of AMC being manipulated, as we see the share price going down, we see more and more institutions buying. One of the things I want to talk about is, of course, how these institutions are using these narrative to get them in at the best price possible and just to buy shares of AMC. Because we have to realize is that as we saw the price of AMC go down, what we actually saw as well was an increase in news articles about telling people to sell their AMC shares, of how these media are saying that AMC is not a good company. Yet what they failed to say was how institutions were continuously buying AMC shares. So we knew that that was the case. And now we already talked about this with a Michael Burry post in terms of the importance of real shares, about how they use these fake shares to layer trades, to layer these short positions. And that's how ultimately he describes the GME situation back then. And this is what we're looking at right now. So you have to understand is that the real shares are still held by the retail, but they want to create this perception is that the retails are leaving and that the institutions are taking over, when that is not the case. And you have to see this as well. Why would the institutions load up on AMC if we were going bankrupt? Why would they load up if they thought AMC was going to have a reverse split? Know what you hold, they want you to sell at all-time lows with fear. Now, one of the things I've always found fascinating about this is how people are claiming that retail are now selling, and it's why we see that the retail ownership is at 40%. However, what they fail to realize, what they fail to say is that retails have not sold shares, or at least the majority of retails have not sold their shares throughout the last 4-5 years, despite whatever news we were faced with. And now that we are seeing how AMC is turning around, now that we are seeing how they're making investments, how they potentially could raise more money, how the box office is doing even better, you're telling me that suddenly, as we see positive news for AMC, that we've all decided to sell? Clearly, that is not the case. And it is why we've known that the price, that these institutional ownership is because of the manipulation, is because of the suppression that's ongoing. And that's why we see these things happening. You can see as we talk about institutional ownership, there are some funds we have to know what's happening. Firstly, we got Discovery Capital buying into AMC. Now, another thing that we have to realize is we also have firms like Susquehanna, Citadel, D-Shore, and other long-time AMC short sellers have all recently bought millions of AMC shares each. Something has a high probability of occurring, something's about to break or flip, the funds are all positioning for this switch or event. So what we're looking at is tons of firms who were previously short AMC have now started buying as much AMC as possible. Now this is after what we've seen with what UBS has done as well, with what Goldman Sachs. For those of you who are unaware, Goldman Sachs, we've seen them constantly spoof AMC. We saw that they took a massive short position on AMC with no long position whatsoever, just for them to get rid of all of those short positions and buy calls and buy longs of AMC. Now we're seeing other firms do the same as well, whereas we're seeing firms like Citadel to also increase their shares of AMC. We see UBS, which we've known holds on to the toxic swaps of AMC, for them to be buying 23 million AMC shares, it really talks a lot about what's going on. And the very fact that it's these firms who has the biggest exposure to AMC who are now also buying AMC as well. And it really just tells, what they are afraid of. Why would short sellers of AMC with these massive short exposure of AMC suddenly decide to increase their stake in AMC, despite what all the news are saying, despite what they have done in the past? Why would they suddenly buy into AMC? That's because they know that something is about to happen. And you can see they thought we would sell the bottom. I'm just buying more. Drop it lower because they can't cover. They're desperate for our shares. And this is, I wanted to show this is because this is essentially what the majority of the apes think. Whenever people see that AMC is going down, they view it as a discount. They view it as an opportunity to buy more shares of AMC, which is why I find it extremely hard to believe that not only has the retail ownership not gone up, but actually going down. Because people, as we see the price of AMC go down, what I'm seeing is how people are saying that this is the discount, that they are buying more. What I barely see is people saying AMC dropped 10%, let me sell all my shares. And so if I find it very hard to see that we went from 90% plus all the way down to 40.96, and during that time the institutions went up to 56.74, when before that they were at an extremely low amount. And this is what we talked about with the suppression that is going on. Another thing that we have to realize is that some people are doubting in terms of the decisions that is happening at AMC, or they're doubting Adam Aron. But one of the things that I want to mention, now this isn't just to say that, we should just 100% be biased about everything. We should obviously take things with different perspective. You have to be able to weigh the pros and cons. However, what I want to know is that why would a wealthy man with an excellent professional track record suddenly decide to sacrifice his reputation, legacy, and safety towards the end of his career? It doesn't take a psychologist to tell that CEO Adam will deliver on those promises he made. Now, it's essentially talking about how some people think that Adam Aron is helping out the short sellers because of perhaps the authorization of shares, the issuance of shares, or other things that are happening. Now, I want to say is that firstly, if short sellers are paying Adam Aron to help them out, that firstly just highlights how serious the situation is and how much money is involved. However, what we have to realize is that when AMC squeezes, the person that will make the most money will be Adam Aron. He has such a big stake in AMC as an individual that he will make the most money. So when you have to realize is that if AMC were to go to $1,000, were to go to $10,000, think about how much money Adam Aron can make. There is no way these short sellers are able to pay Adam Aron that same amount for him to to pay him to help them and prevent the squeeze happening. And so in my opinion, the biggest thing that will benefit Adam Aron is the squeeze. So why would he try and prevent it? Because the short sellers, are desperate or whatever it is, why would he try and help them? You can see also the mindset of other apes, not even considering selling my AMC shares until it hits the very minimum of $100,000 per share. And at that price, I would only consider selling 10% of my holdings. 90% of my holdings will be reserved for a higher price. Now, we've always said this, everyone has different exit price. Make sure you have your own one. You can come to that conclusion on your own. However, what we are talking about is how, firstly, apes have not only not sold their shares, but they obviously have their own exit price. And this is why we've said is that I find it very hard to believe for the ownership of AMC to go down, especially when people are, exiting at these high levels that we've not yet reached. Why would we suddenly start seeing mass selling with no signs and record of it? And this is what we talked about with knowing what's exactly going on within the community. And if you really want to look at the suppression, is this what 9 million shares being traded should look like? A 4-cent range. So when you take a look at AMC, you're seeing constant volume happening. However, what you fail to see with this constant volume is a clear direction that is happening. And what you can see is that despite it bouncing up and down, is slowly going towards the downside, even though we're seeing buys coming in and more buys than sells. And that is because of the high frequency trading. That is because of the suppression of the things like dark pools that we talk about. You can see 66% for AMC. Now we've seen it, and 66% is actually on the lower end, but it is still a ridiculous amount when you consider the fact that the 30-day percentage was at 70%. But this is something that is constantly happening for AMC, the constant use of dark pool, the constant use of high frequency trading, and that's ultimately what's suppressing the price of AMC, what's preventing the price of AMC to go up. And you can see if the short ones stop before they are now, price pegged at a bargain, the algo is just putting the shorts deep under now. Wouldn't be long before the dam breaks at these prices. And it's essentially talking about how these algorithms are constantly being used, to suppress the price of AMC. But yet, what we have talked about in the past before, and these news articles fail to mention, is we saw companies like Renaissance who talked about how their high frequency trading were failing at trading these quote unquote meme stocks like AMC, like GME. And so we have to realize is that yes, the algo is suppressing the price of AMC, but they're doing so at an extremely high cost. And recently we're starting to see them struggle with something they've done in the past. And you can also see how we're seeing, these glitches happening as we see these high frequency algorithms start to struggle. Google flashing GME at 406 sent timelines into chaos. What we can see is that the GME price on Google was at 415 and 406 in terms of previous close and open. And this is something that we've seen plenty of times in the past where it's either AMC or GME that gets a glitch in the price. And you can see that it never happens for any other stock, but constantly for AMC and GME. And that's because we've talked about at this point is not a glitch in the sense that this was a system in an error that displayed the wrong number. However, it's a glitch in terms of the fact that this is what some firms are trading at, but they don't want the public to see. However, the system had a fail and actually showed what the real price was. And that's what we've said a lot of the times for this, sort of glitches that are happening for AMC, for GME. But then you can see for 406, that's where GME will be at. And you can understand why the shorts are obviously worried if they will have to trade GME at 406, if they will have to trade AMC at a higher price as well. Now, another thing, Citadel heads for lowest gains since 2018 as gas profits fall. And this is with a huge advantage Citadel gets from payment for order flow. So we talked about how Citadel is positioning themselves for AMC. What we also have to realize is how Citadel are also seeing them losing profit in other aspects. And this is why we're starting to see them position in AMC and accumulating in AMC, because they've realized how much they're struggling. They've realized they're losing money. They realize they can't be the same as they were before. And when AMC blows up, they are going to take an extremely massive hit, which very likely will take them to bankruptcy. And right now, they don't have the money to continuously suppress AMC because they're failing in other industries. You can see the pressure that we're applying to these guys right now. If you want other signs of pressure, over here, we have the reverse repo. Last Thursday, we saw at 11.7 billion, and then ending off on a Friday at 3 billion. You can see in terms of the number that's going on right now, in terms of the situation we are in within the market. I do think that right now we have to pay close attention to this. Like we've said, it's not just a matter of going to zero and then suddenly the whole world just kind of freezes and the whole market just explodes. That's not the case. However, when it does go to zero, what we are then looking at is how these massive institutions will be starting to struggle as they can't get access to liquidity, as they will have to sell positions, as they will have to scramble every last scrap of capital they can to make sure that they can continuously survive. And that's the situation that we need to look out for, because that's how we ultimately get these short sellers to cover the short positions. That's how we get AMC to squeeze. That's how we get GME to squeeze. You can even see here, trust in collaterals crumbles fast, thanks to isolated events like First Brand and Tricolor. Markets are quietly sounding alarms, are hoping you don't notice. And just like what we talked about with reverse repo, just like what we talked about with how we're seeing Citadel seeing their gas profits fall, This is another showcase of how there is uncertainty in the market and how one of the biggest things, aka collaterals, that's used in the market are now seeing the struggle. And this is what we've talked about with how we can speed up, how we can squeeze AMC, because collateral is ultimately what they use to prevent AMC from going up. You can even see here, Fed will inject 8.2 billion into the market tomorrow at 9 a.m. And this is what we've said with how the constant need for liquidity is a sign of what's going on in the market. But it doesn't stop there. Consolidated Audit Trail recorded an astonishing 34 billion, that's billion stock market errors over a 4-day span in November. Now, this is quite interesting. The reason why I say that is because you can see here, 2.1 billion equity error caught on 1 day, and then 34.3 billion errors flagged by the cat over 4 days in November. Now, the reason why this is very important is because firstly, it showcases why the Wall Street don't want the cat system, because it exposes the things that they are doing. But secondly, the very fact we're seeing this happening right now, these massive numbers, 34.3 billion errors that are happening at a time where liquidity is a massive problem, of talking how AMC and GME is applying extreme pressure towards these short sellers. You know, the timing of this is very, very key. And it just shows how we're putting these guys in a very bad situation. Doesn't stop there. More UBS layoff happening, and just as what we talked about earlier on with how UBS bought AMC shares because of the swaps. And as we see them fail with margin, as we see them fail with everything that's going on, we're starting to see them having more layoffs that are happening. Not only that, Japan to sell 530 billion of US stocks to stabilize the economy. Now, this is something that will obviously affect the market. Of course, the market is way bigger than 530 billion, but the very fact we are seeing this happening is already showcasing what's going on within the industry. It's a show tale of what's about to happen, and they won't be the only one to do it. We're going to be seeing multiple things like this happen, and ultimately looking at the market to be falling. As always, as an financial advisor, do take our consult. We should do your own due diligence and research, and I'll catch you guys next time.